Now I'm serving as a SaverLife tax coach. I write some articles for them. I'm also what they call an enrolled agent. So I'm permitted by the IRS to represent taxpayers before the IRS. And I also happen to be a financial counselor, coach, and educator. So I encourage people to consider is IRS Free File. What you can do is go to the irs.gov, look for Free File, and they have options there for consumers that are a relatively lower income. Well, actually, it's not even that low of income. If you're under $72,000 of income, you can look at the Free File options. Several of the software providers in there are major companies, ones you recognize. You'll see that you've seen the ads on TV or elsewhere for. So, and there's certain forms they have to provide for free. And you can look at each one and see what forms they do provide for free ahead of time before you start the software or start doing your return. That way, you know, if you don't want to get in the middle of return and find out and expect it to be free and then find out it's not free. So if you look ahead of time, they do publish what forms they cover for free. Some of those also cover some states for free as well. So you could get a return fully done for free by doing that. And several of those companies are names you'll recognize. The other option for free filing is what they call VITA, Voluntary Income Tax Assistance. There's centers all across the United States. AARP sponsors quite a few of those. Many of those are shut down this tax season. Some of them have gone virtually, and some of them have do like a drop-off service. You drop it off, they talk to you on the phone, and then you come back and pick them up. So that's another option. The VITA is good if you want to sit down and talk with someone. And there's often VITA centers for different language speaking. So Spanish, of course, is very, very much supported in a lot of those locations. So that's the free stuff. I mean, you can always get forms online and fill out forms online. Anyone can do that for irs.gov for free. The thing about that is you don't have much support with the calculations and making sure you don't make errors. As far as if you're going to go pay for using software, the major name brands tend to be pretty good and accurate. They got a lot of support. Every one that I can think of, I guess I can mention a few names here. The TurboTax, H&R Block, Tax Act, all of those have support for you. So if you run into technical issue, they'll have someone who can help you. If you run into tax issues, they have someone who can help, or concerns or questions. They have someone who can help you. You may have to pay for that additional advice and help, but that's one way. If you're not confident while you're preparing your return on the software, but you're not ready to go seek out a tax professional who may charge you considerably more, that's a good way to kind of, I guess, split the difference. You're already trusting that company's software. It's not that big of a step to move on and trust their tax professionals that'll help you remotely. And SaverLife is a nonprofit that encourages people to save. And one way we're encouraging people to save this tax season is we're encouraging people to try the free file options. If any of our members pledges to use free file options, they'll be enrolled in a drawing, and they're picking, I think it's 40 members, if I get it right, 40 members to give them $50 to, I think it is, each week. And so they're giving out $20,000 to its members if they pledge to use the free file options. And we encourage that because, like I said, if you're paying $300 to a tax preparer, that could be your groceries for a week or a month. It could be a car payment. It could be something that can help you in other ways. What ends up bringing people to someone like me to help them prepare their taxes is often they dive into something they're not quite ready to dive into yet. And they try to answer the questions in the software. The software is not quite, they're not either understanding the question, or maybe they should have done a little reading on the irs.gov and the publications before they try to do it. But people trying to itemize when they don't normally itemize. So it's like the first time thing. You end up with a rental house, or you buy a rental house, and it's the first time you do the rental. A lot of times we see errors there. So I do encourage people, if they have a big change in their life and it affects their taxes, they may want to consider that year to go to a tax professional just to make sure everything gets done right. The IRS says one of the most common errors is still if you have to mail something in, whether it's a tax return or some kind of follow-up form. The most common error is actually people still not signing the documents, which may seem kind of odd, but that is a common error still according to the IRS. One thing I see lower income individuals miss out on sometimes is called the saver's credit. So if your income's below a certain level, the IRS is the government is encouraging you to save for retirement. So when you enter those W-2 numbers into the tax software, you're going to want to make sure anything that's in box 12 of the W-2 gets entered, because one of those things is going to be possibly contributions to retirement accounts. And if you're of lower income, not only do you get the benefit of those retirement accounts having tax benefits, like not like the money you put in and for a traditional does not get taxed when you put it in as income when you put it in, and money that you take out for a Roth doesn't get taxed when you take it out. Not only do you get that tax benefit, but for lower income individuals, they can qualify for the saver's credit and they'll get a little bit of extra. It might only be $100, might be $200, but still $100, $200 can make a big difference for some people. There can be a lot of confusion sometimes with dependent status on who to claim when. And it's the IRS can help you with that. IRS.gov has what they call an interactive tax assistant. So if you say, well, can I claim my cousin on my tax return? You could go to that interactive tax assistant on IRS.gov, and it'll take about 15 minutes. They'll ask you a bunch of questions, and at the end, you'll get an answer as to whether or not you can claim your cousin. So IRS.gov is kind of underutilized. So I guess we could call that a mistake taxpayers use. They really focus on that tax software a lot of times without looking things up. And the IRS has those tax topics you can read on their website. They had those interactive tax assistants for specific questions. And then if you're still not getting a clear answer and you like digging into instructions and publications, you can look at all the IRS publications that are in there. And if you're not going to go to that tax professional when something new comes on your tax return, I do encourage people to go look at the applicable publication. So there's a publication for selling a house. So if you sell a house, it's a good idea to take a look at that publication and read those if you're going to do your taxes on your own, or even if you're going to go to a tax professional, just to make sure it makes, what they're doing makes sense to you. Well, I've heard a little bit about those. I haven't really seen the stimulus scams. Most of those were probably because the IRS gave people an opportunity for the first stimulus to go online and request the stimulus if they hadn't received it yet. So I would think that most of them were because of that. I can say that if somebody ended up getting stimulus in your name, or you didn't receive that second round of stimulus for whatever reason, when you file your tax return, it shouldn't be a problem with you receiving what you did not get. And also, ultimately, if the government is supposed to give you money through the tax system, you're going to get it. The big question is how much of a pain, how much trouble you're going to have to go through to get it if somebody else did claim your funds. So the good news is you'll get your money eventually. The bad news is it could be a hassle to do that. As far as unemployment, I don't know that's not exactly my area of expertise other than the taxability of it. I'm not too familiar with that. I do expect a lot of filers will go after that, what they call the recovery rebate credit. That's how you pick up the stimulus on the tax return if you haven't gotten it yet. I do expect a lot of fraud there. And basically, it piggybacks on the traditional big money fraud of individuals with the child tax credit, additional child tax credit. The people who commit the fraud really like trying to put those children on the tax returns to get those $10,000 or even like a $15,000 refund. So I think that's where the recovery rebate credit is really going to be targeted by those individuals. One thing the IRS does to help that situation a little bit is they don't accept returns with earned income tax credit, or they don't process returns with earned income tax credit and additional child tax credit until February 15th. Usually they start accepting returns mid to late January. And that gives people time to make sure that they file. And if their return gets rejected because somebody else claimed the children, that gives them time to mail the return in, tell the IRS that, yes, these children are mine, and dispute that the criminal, the one who tried to claim their children, isn't supposed to be the one to get money. However, this year, they're not even accepting returns till February 12th. So that window is not large to where you can respond if somebody else claimed your children. So I do encourage you, if you have all your tax documents and everything you need to file the taxes, to get it basically in the queue of whatever tax software or tax professional get it in there by February 12th, just to mitigate the risk that somebody else is filing for your children. Usually it's the children. Okay, that's a great question. So you've already chosen a tax professional in most cases, right? So you already have the person you're dealing with, and you've already trusted them with your information. So, and that tax professional or that tax service or company, they're used to protecting consumer information. So they're going to follow the industry standards for protecting that information. So I would say if it's someone you've already been comfortable with, you've been working with them, and they start doing, if they haven't done it before, start doing virtual options, then I would say it's okay to stick with them. And many of them have moved to virtual options. You can upload documents online. I would try to avoid emailing documents. I would stick to the things that are basically encrypted and designed to protect your information better than the email. And all the big tax services have those, and the CPA companies and stuff. If you're with a smaller tax person, they may or may not have that, but they can get it if they don't, because there's software options out there. You can. Some companies and individuals, some of those VITA sites I've talked about, they are offering a drop-off service. So basically, you bring all your tax documents to them directly. You maybe fill out a form for them. You leave it there. They call you to ask any questions they have. They finish up the tax return possibly while you're on the phone with them, and then you just come up and pick up the documents, maybe sign a few things. So I think I would say as long as it's an established firm, someone you're comfortable with, particularly if you've been dealing with them a long time, it should be pretty safe to do this at a virtual method. But basically, you found a new person or a new firm you want to try out, or you have to try out a new person. So as far as the individual, the IRS maintains a directory of tax professionals. So you could check to see if they're on that directory. Some states like California, New York, Oregon, they have specific requirements for tax professionals as well. So you could check on there. If the person is actual CPA, basically most states maintain some kind of directory where you can check them out online as well. What I prefer is that you get a recommendation from somebody who has a similar tax situation. And then, of course, you could also check them out on the Better Business Bureau, possibly see if they have any complaints there. I would look at Consumer Financial Protection Bureau's website to see what guidance they have on choosing a tax professional. And probably your website would be a good place to look at what people think about different firms and about how they handle business. So that would probably be good too. So it is based on the complexity of the taxes. And most firms that I'm aware of charge by the form. So the more forms you have to use, the more costly it can be. And this, unfortunately, is why many of the individuals who do qualify for the earned income tax credit end up paying some considerably high fees, because there's a lot of forms associated with getting earned income tax credit, additional child tax credit, the child tax credit. All those forms add up, and if the firm is charging by the form, it could end up being $300-$400 or more sometimes. So it's not unusual. If someone's single, $100 is probably, if you're paying a tax professional, is really on the low end. And then $150 is probably normal if all you have is a W-2 and you're filing a state and local and a federal return. But it can range considerably. If you go to a small, if we use the term mom and pop shop, somebody who just does them, they have their own business. Usually those will be a little bit lower than the big retail tax services, but you're going to want to be careful that they really back up what they do. And the retail tax services do offer, they typically back it up to some degree, especially with the penalties and interest. And sometimes they'll back it up even more. Often you have to pay a little additional fee for the extended guarantee, but often it's worth it. If you go to like a big CPA firm, they're typically going to be similar to the retail tax offices, or maybe even more, especially if you have a lot of things going on. If you're a higher income earner, you have a lot of investments, that type of thing. Well, I think I want to go back to when you're trying to file on your own. The big key there is to make sure you feel comfortable with the questions being asked by this tax software. They make sense to you. If you're sitting there hesitating about the answer, or what are they really asking, that's when you need to start saying, well, how much more information do I need to answer this right or enter this right? Sometimes the tax software has websites where you can go do a Q&A and ask questions. Sometimes maybe you just need to upgrade and have that consultant, their tax consultant, help you out. And in some cases, maybe it's time to go seek out that tax professional. And like I said, usually it's with those changes. And if you're trying to make something fit, it might not be something you're doing correctly. So I would just say tread carefully in the software, put a little thought into it, and make sure you're understanding the software. So that would be my general tip. Is I am part of a small network of financial counselors. We have a website, betterfinancialcounseling.com. We do a blog, and we let people know information about anything financial, really. But recently, we've done a lot of tax articles since it is tax season. I think the key to a lot of this stuff, both in taxes and finances, is just devoting some time to think about it. A lot of people just don't do that. So devoting some time to think about it and think about what's best for you and your family. With SaverLife, as a SaverLife tax coach, they really promote saving. They're a nonprofit. If you become a member, you'll be eligible for cash rewards to actually basically encourage you to save. The last thing is, don't be afraid to talk money sometimes with people, especially if you have a partner or a spouse. I see a lot of cases, both with taxes and with personal finances generally, that people just don't communicate. And if you want to get, I guess, better results or make sure you have a better relationship, sometimes you just need to talk about the money.